What's happening, you all? We back again for another one. CoWaCo, the company water cooler. Like, subscribe, comment, and share. All right. Oh, we're not financial advisors. It's for educational purposes only, but we about to get it in. Our first point that we're going to actually discuss today is ding, 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 ding. How you should move, or rather, should you move silently in the market?
Yeah, that's am I unmuted? I'm unmuted. Okay. So
yeah.
we are not, look, I'm good, right? We are not financial advisors. I'm working on that though. I'm working on that because that financial advisor life that's admirable. I need that. So, ladies and gentlemen, that is Leroy. I am Chris. Thank you for joining us on the company water cooler. Should you move in silence when you're in the market? What does that mean? Should you just invest, keep your mouth closed, don't say anything to anybody? Yes. Next point. No, so it's really like, yeah, look, I had to get, because Leroy was like, oh, no, usually you go for like 15 minutes so I can take some note. So we're going to make this a moving episode today. I'm going to walk and talk with y'all. So yes, you should. That's the short answer. On the flip side of that, if you decide, and when I say moving silent, I mean like I'm not saying you keep information. I don't even want to say keep information. But what I'm saying is you invest, you just invest, you keep it that way, you do your thing. You're not out here teaching, you're not out here sharing information, you're just investing and that's it. Yes, there are benefits to that because you don't have anyone in your pocket, right? If we get on here every week and we say Apple, Microsoft, Google, Caterpillar, Tesla, Home Depot, Walmart, Target, all of this, you know where our money is, right? You can't sabotage that, but you know where we're putting our money, right? If I say, oh, okay, a good dividend play, you want to try one of the ETFs that'll bring you a consistent dividend. Oh, okay, look, you could try this DIV thing, this, dividend, you could try that. You could go, excuse me, if you want to go the real estate route, you can go Realty. If you want something that's super, you know what I mean? Like we could go and oh, well, they probably got money in there. Like those men probably got money invested in those companies. If you move in a way where you just invest, you keep everything, you're not out here teaching, sharing the information personally, right? And not over the internet where you don't know who is going to view it, right? Then again, I'm not saying you're taking a chance. Obviously, you're exposing your investments, but you're opening yourselves up for critique. So should you do that though? Should you make, completely silent moves? Well, real power is concentrated there. So yes, but it depends on your goal and investing, right? So I bring this up because this is going to be a year. I'm going to tell you that this is going to be a year because there are the economy is down. Everything is down. I think I just looked at Apple the other day. Apple is at like 42% off from the high, which is great for Apple because Apple is a $2 trillion company. So it's at a discount right now. So I would recommend, I'm not a financial advisor yet, so I'm not responsible for any losses or gains. But if you do make a gain, go ahead and throw some credit my way. If you make a loss, that's not my fault. But I can say, hey, Apple is a great investment. I can suggest that you invest in Apple, which is what we do on our favorites of the week on this segment. Every time we do it, these are suggestions, right? Again, you're getting an insight into our portfolio. When you look at the economy now and you look at, hey, every day I feel like you'll hear somebody talking about, oh, the cost of this is going up. The cost of that is going up, right? Oh man, the cost of eggs. I'm like, yeah, yesterday's prices, man. Like you have to understand things are not going to stay stagnant, right? And you have to move your money with the market, right? So there's always an opportunity in any kind of market, right? If you don't feel comfortable, obviously, divulging information, then yes, keep that to yourself until you find something that works for you, and then you can share that. But you don't always have to move in silence when in the market, because you can build camaraderie once you make that announcement, like, hey, I've got this many, not even the number, but I have this investment, that investment, that investment. And a more seasoned investor can say, hey, he can come up to you and say, look, I see that play that you're making, but look at this chart, look at that chart, look at the trajectory, where it was, where it's predicted to go. Here's what the experts saying. This is what the banks say. This is what this financial institution, so on and so forth. The bank, financial institution, same thing, but this is what this financial institution says, that financial institution says. Okay, cool. Try that out. Let's move and let's go that way. Supply and demand. The more popular a stock, the more people want it, right? That demand is up there. The supply is going to be shrunk, it's going to be held, and the prices are going to go up. So move in silence, yes. Move in silence, no. Depending on what you want for your what your outlook is, right? And it depends on your level of comfortability with sharing information.
All right, that's what's up. Moving silent. Stealth mode.
If you
All
need,
right.
you know what I mean? If you need.
Yeah.
But if you
All right.
need assistance, there are 2 emails in the description of this video. Reach
yeah.
out to us. We'll help you as much as we can. We're not financial advisors. I'm working on that, but let us know.
Yeah. We'll definitely try to answer questions
Leave a comment.
best we can. All right. So second thing.
I don't
Go
know.
ahead.
Do you read the comments, Leroy? I
Yes,
saw a
I
couple
do.
comments in there. You
I
do? I was
do.
like, man, we out here, we a little popping. You know what I mean? I seen a couple comments. I didn't respond. But I was like, oh, this is nice. But go ahead with the second point.
Okay. And we try to answer the comments too. Yeah. So
Yeah.
gotta get some. All right. So the second one is, how do you measure that your strategy is working within the market? Chris.
Yeah. This is a little more detailed. It's not complex. It's just a little more detailed. You have to measure your success in the market by the goals that you set. That's the best way to do it. So if you are looking for income from your investments, but your investments are not providing income, your strategy is not working, right? It depends on when you want that income. If you're cool with quarterly dividends, okay, cool. Companies that do that. UPS gives a good quarterly dividend. Walmart gives one. Target the companies that do that. And if all you need is a quarterly dividend, cool. You put your money in there, that's fine. If you're looking for monthly, the companies that give good monthly dividends or get, good monthly returns. So that you'll have to set your portfolio up in a way that will provide that for you. Hey, this is going to bring me something in every month. This is the best in that category. Always go for the best. I understand you got the top 5 company, whatever. I get that. The number 1 and the 2, they're number 1 and 2 for a reason. Everybody wants to find the next Tesla. Everybody. I want to invest $100 and make $1 million. Everybody wants to do that. That is very, 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 very rare, right? Especially depending on your status in society. If you don't have the ends with the companies, you can't invest $50,000 to make 80 million, right? Because you're not an accredited investor and you don't have access to, right? All of these things. Once you do, then obviously you can, but up to that point, you are unable to. But if your strategy is working for you, also in life, what you will see is certain issues start to fall by the wayside. Certain things that used to be problems are no longer problems, right? You used to have to decide between paying a phone bill and paying a little bit on a light bill, or paying a light bill and extending your phone bill. Now you don't have that issue. And again, these are small issues, right? for many of us. But what you'll start to see is that your issues become bigger, right? So the little small things you don't sweat anymore. You stop sweating groceries trips. Like, oh, I'm not even going. Okay, cool. You stop sweating bills, right? Oh, this is due today. Oh, I forgot. Boom, let me send whatever. So you start to see certain things fall by the wayside, right? And obviously your strategy is working when your investments are yielding good returns, right? And you're able to do more with your money. But your strategy in the market is working when you can say, hey, you know what? This strategy's been working for me for a year and a half. I think by year 4, I'll be able to quit my job. I'll be able to, or what Keys say, I'll be able to fire my job, right? I'll be able to let them go in 4 years. Like, wait a minute, this is okay. If your strategy is not working, obviously you're like, man, you know what? I've been doing this for a year and a half, and it's pretty stagnant. Like it's not really doing anything. Go ahead and switch up, right? Go ahead and start doing what works. But you'll be able to tell very quickly whether or not your strategy is working based off the goals that you have and where you want to be. Set those short-term goals, 6 months, a year, 18 months, and then set those long-term goals, 60 months. 72, look, 60 months, I'm trying to do the math. 60 months, 196 months, like set those goals for 6 months in a year. At the same time, you set those 5-year, 10-year goals. And you'll start to see, okay, well, the 5 and 10 year is going to work because 9 months in, okay, it's working already. So here's what it is. And honestly, it won't even take 9. 3 months in, you'll start to see 6 months in, 12, 18, and you can go from there. Have a plan. The short term will start working for the long term. Then you know your strategy is working. If you see that your strategy is not working in a year, I wouldn't say anything less than a year. I would give it a year. If your strategy is not working, like, and I don't now, if it's terrible before then, and 3 months in, 6 months in, it's obvious it's not working, then go ahead and drop it. But if you see that the strategy is not working, you know, but it's not working, but it's working a little bit, I think I need to make a change, you know, then go ahead and take that year to do that. Go ahead and do that after that year. But you will be able to see your long-term working in the short and just double down on that.
That's what's up. Fire your job. I like that.
Look, now, yo,
you fired.
You know, like Keys, 19 Keys, double salute. That's my guy. If you ever watch this video, hit us up. But it's very much like, it makes a lot of sense because I'm letting them go. I don't need this anymore. Like, I can work for me now. So I like that line. We're using that.
That's what's up. Yeah. And you and also too, to piggyback on what Chris was saying, if you're making like the amount of money that you're actually making within like a month, that somebody has to actually, you know, make over the course of maybe like let's say like 3 months or 6 months, and you making it within a month. Whew,
that strategy is working.
Yeah, strategy is working. So yeah. So keep that in mind. You know. So all right. So talk of the week. Yo, Chris, you want to go first or?
Oh, you want me? Okay, yeah. Listen,
no, I'm just asking.
Yeah. Let me go because I got an ETF. I'm gonna put in there.
Oh,
so
okay.
I'm gonna say,
all right.
you know, ETF alert. So the first company that I'm gonna go with is Target, right? Target is doing fantastic, and this retail season is great. It's been great, and Target is one of those companies. Again, I mentioned it before. It's one of those companies. They just have that customer loyalty. Target is the Apple of retail. If you shop at Target, that's where you shop. You know, and anything else, honestly, you go to like these, you go to a boutique after that. You're shopping and spending 2 and 3 times more. The second company is McDonald's. McDonald's is like we see it at McDonald's everywhere. We see McDonald's everywhere, but they McDonald's does pretty well, and they're not in the news a lot. I don't see a lot of news articles about, oh, McDonald's is doing it, McDonald's is doing that, because they have a great management team, and the CEO, to the first point, he moves in silence. Hey, I'm gonna do this thing, and we're gonna get this money. So I appreciate that. I really, really do. And then my ETF for this week, ETF alert, XLK. I think right now is the best time to buy ETFs because we're in a recession, because the market is doing horribly, because we need the Avengers. We need an all-star team that we can put our money on. And a lot of these ETFs and companies are at a discount right now. XLK, XLY, definitely go ahead and get you some bundle deals. Right now is the time to bundle. It's the time to come together. It's not the time to separate. All right. It is the time for us to bring all of our resources in, multiply those, and start consuming as a unit. Start going to go buy this building and that property and that property and that investment as a unit. So when the smoke clears and the economy starts running again for the next 10 years or the next 7 years, okay, we'll be making money on money on money.
Yeah. See, he just told y'all a strategy.
Well, I look, not a financial advisor yet. I'm telling you when I am, it's over. I'm telling you. Okay. I am going, listen, when I become a fiduciary, I got you. Money questions, bring them to me, please. I encourage you.
That's what's up. That's what's up. All right. So now Chris actually mentioned this company before in one of our videos. So you got to go back in the videos and see. So my first company is going to be 3MM.
3M. I love 3M. I love 3M. Go ahead, Leroy. Go ahead. I love it.
And I think the ticker for that is MMM. Then that's the ticker for that particular company. So definitely check that company out because the dividend, they've been giving out dividends like forever. You know what I mean? And that particular company, right? Like depending on what the stock market is actually doing, it always survives. That stock always survives. Keep that in mind. Any type of like weather that's going on or situation going on in the stock market, 3MM, it's in there, boom, fighting, staying safe. So y'all check that one out. All right, so my next one is Pepsi. Pepsi is another company that actually, depending on what's going on in the stock market, Pepsi right there doing this thing. Look, the stock market is down right now, but Pepsi still was going up. How the heck that happened? Check out Pepsi. And plus it gives out dividend too. And good dividend also too. All right, my last one. My last one is, you said UPS. I'm going to say FedEx.
Yeah. Yeah.
So, throwing out there for the FedEx. Look, we got delivery stuff still going on. They still delivering stuff. UPS still delivering stuff. So, even though this market is down, they still delivering stuff. People still ordering stuff. So they're at the house. They on that computer. Boom, 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 boom. Oh, you order this. Oh, it's coming through FedEx. Oh, okay. This is coming through UPS. Oh, we can't forget about Amazon too. You know what I mean? They deliver also too.
Hey, man, yeah. Amazon is in the background this whole year for favorites because they got the rating this year. JP Morgan is expecting them to go to 140 something. Amazon is in the background. So we constantly, what I would suggest, Amazon, if you can invest in that, But put $100 in a week, $50 in a week, because Amazon is up there. Amazon is going, man. Amazon is figuring out and it's a technology company. So when Amazon, what happens with technology is it is ever evolving. It used to be you needed a laptop every 5 years, every 7 years. Now you need a laptop every 18 months, every 12 months. And not because the old one is going, you know what I mean? Not even because of product obsolescence, but because the chips are smaller, faster. They store more information, right? And the computing power is better. What it used to take 5 years in advancement now only takes 18 months. So Amazon, yes, in the background this whole year.
All right, you all. Like, subscribe, comment, share. The CoWaCo. We out. Peace.